Today I just want to do something very different. A lot of you have been asking me, Mr. President, where do we invest and what do we do in the year 2024? Well, there's a lot of things that we can look into. I mean, it has been a very unpredictable year. 2024 is being unpredictable. So is 2023. But if you look at the stock portfolio for 2023, you realize that the Magnificent Seven did quite well in the stock portfolio. But what is it that we can do in 2024 now? Well, I had a recent interview with CNBC, and we're just talking about investing in general, where investors can take advantage and capitalize. And like I said, we spoke of a lot of things. And I'm quite pleased that in the commodities market, there's a lot that we can actually look into. So with that being said, please hang out with me until the end of the video. And without also wasting your time, I want to thank today's sponsor, Okta. Of course, they are our official sponsor for Trade with MJ season 2 of psychology, as well as live market madness with your president. So you may be asking, President, what is the Magnificent Seven? Now we're looking at these big companies that did well, and there are 7 of them. Looking at Tesla, you're looking at Apple, you're looking at Meta as well. So there's quite a lot of companies that did well, but in the beginning of 2024, I don't think they were able to find feet. And I think for me, commodities did better than most of these stocks, especially the Magnificent Seven, right? Now, I always say to you guys that money is energy, and if you're going to invest in money, there are certain laws that you need to understand, study them, and always understand at the back of your head that money goes where money is. Money doesn't stay in one place. It will always go where money is. You just need to study. The trading industry is more than just support and resistance. It's not only about that. There's a lot of things as traders we need to know. We need to understand. We need to study. We need to make research. We need to consult. Because trading intraday setups on a CFD platform is one thing, but bear in mind again that there's a world of investing where you can hold certain portfolios for the whole year. Maybe for 12 months, you're just holding a certain portfolio. Hi traders, sorry to bother you. I only need a few seconds of your time to tell you about this amazing campaign. Now, we all know that trading with friends can be fun, but what if I tell you that it can also be rewarding? Okta has launched Okta Friends Contest, which offers you a chance to expand your trading network. Now, you can earn $1 per each standard lot your friend trades, but also enter a draw for prizes up to $1,500 in gift cards. Isn't that amazing? Now, you may be asking, how do I join? The first thing that you need to do is to get your referral link as you see in the screencast. It is in the invite a friend section on your profile. And the second thing that you need to do, you just need to share it with your friend. After sharing it with your friend, this is the third thing that you need to do. You help your friend to start. Tell them how to sign up with your link and open an order of any volume. Now, this is the last thing that you need to do. Wait for the prize draw. Once your friend opens a valid order, you both enter a prize draw automatically. Now, this is what you get. $1 per each standard lot your friend trades. You also get an opportunity to win a gift card worth $500, $1,000, or even $1,500. What is it that your friend gets? An exclusive 100% deposit bonus. They will also have an opportunity to win a gift card worth $100. They will also experience a spread card during the campaign period for the following symbols: NAS 100, US 30, Euro JPY, AUD USD, USD CAD, XRP USD, and USD ZAR. This contest will take place from the 21st of October to the 10th of November 2024. Get ready to invite as many friends as possible. Also note that I will be announcing the winner that day on the Okta Broker YouTube channel. Let's trade together, win together with Okta. Cheers. So yeah, let trading not just be about you getting on your trading platform and you just arrive there and just say, I want to trade. Even for your children, there are certain stocks, certain commodities as well that you can hold for the whole year. And you might even say, look, I'm going to hold this stock, I'm going to hold these commodities maybe for the rest of the year, so that next year I can pay school fees with that money if this will perform well. But again, it goes back to research. We need to make research about this portfolios and understand the dynamics of the market. How does the market work? It's beyond only just trading on a CFD space or environment, and you just plug in and you play and you just trade. There's more into that. So let me not waste much of your time. Watch the video and I'll check you out in a bit. Thank you.
With a year that has proven unpredictable, especially for investors seeking to diversify their portfolios and hedge against inflation, global broker Okta says the following: the commodities market is emerging as a key area of interest for investors, with the likes of gold, oil, lithium, and hydrogen proving popular. MJ Gibbons-Kasi, who's a financial analyst at Okta, joins us for more to share some key market trends and insights for savvy investors. MJ, thank you so much for your time. So let's talk about some of these dynamics that you're seeing. Let's start off with gold, because gold has been an interesting one in the sense that you note it is living up to its reputation as a safe haven asset. But what has also been interesting to see is the movements in gold alongside the movements in oil. What do you make of it?
Well, thank you so much for having me, and good afternoon to everyone that is watching and listening. Well, as you have clearly said, we've had a very good season in gold this year, currently trading at $2,700 an ounce. We actually hit the all-time highs in gold just yesterday, and it tells you and it shows you a clear picture of how much gold is in demand. As you clearly said, that gold is also a safe haven. Also bearing in mind the geopolitical tensions that we have, especially in the Middle East. The people and traders are continuing to have their net long positions on gold. Hedge funds and money managers as well are looking to pile up their orders on gold. Can we go to 3,000? I think that would be too ambitious to think that we can go to $3,000 an ounce this year, but well, it's a possibility. Well, on the other hand, we have seen some drops in oil, especially Brent crude oil. We see that we have some consolidation in between price of $72 as well as $74. So anything that goes above $74, we can relatively see a momentum going to the upside, and anything that goes below $72 a barrel, we can clearly maybe anticipate that we can find a low at $65. But well, it's a clear picture to show that the markets are volatile, and investors just to mitigate risk at the end of the day and see where they can maximize and capitalize on these markets.
Given that you say that markets are volatile, which indeed they are, what do you then pay attention to when you have a look at either, gold or oil price movements? What are some of the macro aspects that investors should be watching?
Well, we know that compared to the financial markets, we know that commodities are largely influenced by supply and demand. And usually during the time of inflation or currency devaluations, big players and big speculators always come into place. Also bearing in mind India's reduction in import duties has boosted the retail demand, and that's why we see that significant strength in gold. There's a lot of speculation about currency pairs. The US dollar, we know that gold is priced in the USD. Elections are coming, and obviously when we see strength from the US dollar, we can see gold depreciating. I'm anticipating a retracement back to 2,650 or so, and that's where maybe we can reload from there.
An interesting one for me has been lithium, in the sense that I would not think it's a market that as an investor you'd be looking into. But talk to me about what you're seeing when it comes to the lithium market.
Well, we know that lithium has played a very vital role, especially in the electrical vehicle batteries. And EV sales are expected to at least increase or rise in the year 2024 by 35%. So clearly there is a demand there. One would arguably say that lithium is not a liquid market as yet, but again, investors can always take advantage in lithium opportunities and lithium stocks and even ETFs.
What's happening on the price side when it comes to lithium? I mean, if you look at what was going on in 2023 last year, you saw a bit of an up and down movement, quite a bit of volatility on that side. But what do you make in terms of lithium prices?
Well, look, again, geopolitical tensions plays a very vital role. We are having a very unpredictable market. Again, consolidation is coming on all these commodities. And one would say if we pay too much attention on lithium and forget about the rest, when is it going to be the right time to invest? Again, investor comes in and say, I'm just going to maximize and mitigate risk in lithium. So, well, in my opinion, I'm seeing consolidation there, but I think we might see a drop in the next coming year.
In terms of prices, again, I mean, how much of that does it depend on the demand for EVs?
Well, as we have seen that commodities market is evolving, and we see that there's a lot of production that is coming in, especially with the EVs. People want to do away with petrol and oil and other commodities. Will say maybe this is an alternative to look into EVs. People are looking into buying electric vehicles, and we see that there's a production rise in electronic vehicles.
How do you play the lithium space? I mean, are there, ETFs or stocks or particular companies that have this exposure to lithium?
Yes, like I said, it's. I don't want to go to hydrogen as yet, but one would say that lithium is not going to be traded like your common and traditional commodities. But like I said, ETFs will be an alternative for them, as well as looking and factoring the fact that right now electric vehicles are in high demand, and price where it is, it can stay there, it can rise maybe, like I said, by the end of the beginning of next year.
Okay, let's move on to hydrogen. I mean, when we look at the conversations around hydrogen, it has generally been described as something that could be a cornerstone for the clean energy transition. Has hydrogen lived up to its lofty expectations?
Yeah, well, I think so. I mean, you look at direct investment that came in place in the year 2023 on hydrogen. We're looking at nearly $16 billion of investment that was directed on hydrogen. One again would say it's not traded like your traditional commodities like your gold and your oil. But investors can always take advantage of companies that are involved in hydrogen production and infrastructure. Use that as an alternative to come in and capitalize on that.
When it comes to those companies, are they majority, based in the China side of things, or there's also a US play here with companies that have exposure to hydrogen?
Well, I would say 50-50. Looking at the tension that we have between China and US, one will relatively say that we have a fair amount of companies coming from China as well as the US.
When it comes to those tensions, I think a lot of us are so used to them around the technology side when it comes to semiconductors, etc. Should we expect these tensions when it comes to clean technology as well?
Well, to be quite honest with you, I think everyone is just waiting for November to pass to know who's the next president of the US and what is the mandate that the next president is going to use to try and mitigate risk, and also the tensions that we currently have now. One will say it's an old war and it's ongoing, and who's going to end it. But when you look at, again, technological space, you look at companies like Apple and companies that are coming from China, we're having a serious demand, and more especially in Africa. China is having a lot of demand in terms of this tech gadgets from Africa, as opposed to US. I mean, the latest iPhone is being released, and I think we are not having that demand, especially from the space of Africa.
I want to focus in on gold here. I mean, if we're talking about a lot of these companies being used as a hedge against inflation or currency devaluation, when we look at the gold side of things, on a short to long term, what are you hedging against?
Well, like I said, inflation in general, I mean, we have to look at key areas like inflation and as well as interest rate. One would say have a close look at the strength of the dollar. Things like gold, as I mentioned, that you would find it's priced in USD. So obviously, people and investors, traders rather, they have to come in and look at the dynamics that comes in at the value of the dollar.
All right, MJ, let's leave it there. Thank you so much for your time. That was MJ Givens-Khasi, who's a financial analyst at Octa. With some analysts who are also looking at the commodity space, saying that at least from the long term